public attacks on the Fed chair is raising long-term and institutional concerns when it comes to the independence of that economic body. For more on this, let's bring in Michael Greiner, an associate professor of management at Oakland University School of Business Administration. Michael, welcome back. It's good to see you.
Thank you. Great to be here.
Okay, in many ways, we're in uncharted territory right now with the president leaning on the Fed chief. Virtually all other presidents have given the Fed room to operate, a hands-off policy without political influence. What sort of stress on the markets and confusion is this relationship fueling?
Well, actually, if you go back to the 1970s, there was a period where then President Richard Nixon pressured the Feds to lower interest rates. And as a result of that, of course, we got the stagflation of the late 1970s. So we have seen what can happen when the Fed loses its independence. But in terms of global markets, I think there's a lot of concern on them. Part of what makes the United States a valuable place to invest is that we do have this rule of law and this kind of certainty that people have when they invest here, that they can count on certain things. And unfortunately, with the way the president's behaving, that's all thrown up in the air, and nobody really knows what to expect as a result of it.
Yeah, and you talked about the way the president is behaving. He has once again reverted to name calling. We just heard referring to Powell as a numbskull. Now, Powell continues to take the high road. He's not taking the bait. He's simply doing his job. Let's talk about that and the key takeaways from Powell's statements today.
Well, number one, I think it's interesting that you found the president saying that he thinks that he's doing this for political purposes, because the irony here is that before the last election, there was a lot of talk about the fact that Powell could have lowered interest rates and potentially helped Joe Biden and the Democrats in their reelection campaign, but he didn't do that because he doesn't succumb to political pressure. And that's kind of one of the things that really has been shown again and again with the way that he behaves. The bottom line here is that politicians always want to see easy money. They always want to see the Fed or the central bank lowering interest rates and essentially pumping money into the economy. The problem is, though, is that we've seen what can happen again in the 1970s with inflation back then, or more recently, we've seen it in Turkey and in Argentina, where political pressure has been applied on the central banks, and they've made basically low-cost money available. And as a result of that, you've seen incredibly out-of-control inflation. And that's really what I think Chairman Powell is trying to avoid right now. And he's made it very clear that he feels secure in his position, and he's just not going to be rattled by these political attacks.
And Powell's also made it clear that he is going to be driven by statistics, something that shows him he needs to drop the rates or raise the rates. So what are you looking for in this upcoming Fed meeting?
That's true. And actually, Powell has been very consistent about this, that he has not been affected by anything except the data. And at times, because the data sometimes is looking backwards, they've been a little bit late to move. Like, I think some people felt that they were a little bit late to move when inflation was started up shortly after the COVID recession. But looking forward, I think that, frankly, I think we're not going to see a lot happening. I think that when you look at the numbers the way they are right now, the honest assessment of the economy by most economists is that the Fed is doing the right thing, which is sitting and waiting and seeing. We had a little bit of an uptick in inflation in the last report, and that's something of concern. The job market remains relatively strong, so there's no indication that they should lower interest rates there. The president mentioned the fact that housing costs are high, and he's right about that. The issue, though, there is not so much the fact that interest rates are high, although that's one factor. The biggest issue there is the fact that the United States has an undersupply of real estate construction since basically the 2008 recession. So you're kind of mixing apples and oranges there.
Yeah, and as soon as the Fed meeting ends next week, we can certainly expect attention once again to switch to Trump's growing frustration and even bullying of Powell. It has been debated, but do you think the president has the legal authority to bounce Powell if he wants to? And what would that do, A, to the markets, and B, to the U.S. reputation?
Well, there we would certainly be going into uncharted water, because no president has ever tried to fire a Fed chair. And so if he took that action, you can be sure that it would end up in the courts and would end up at the U.S. Supreme Court even. At this point, Trump, I think, is being advised by a lot of people, because he has people around him who know the way the markets work. And there's a lot of concern that if he were to essentially rattle the Fed in this way, that it would create a lot of uncertainty around the globe. where people just wouldn't necessarily have the confidence in U.S.-backed assets where they'd be willing to invest here. And I think that's the biggest concern, is that if we tried to make some move to replace Chairman Powell, then it could result in a situation where actually interest rates go up because of the fact that other countries aren't necessarily willing to invest in the United States because there's so much uncertainty going on here.
You know, and there is another scenario out there. Powell, as we mentioned, slated to be on the job through May of 2026, but Trump will have the chance to appoint other Fed governors, as I understand it, during that time. And given Trump's track record, it's safe to assume that he is now going to appoint someone who simply rubber stamped what he wants done. How is this going to play out if indeed that happens, and are there concerns out there?
Well, that's a great point here. And we have to remember that the Federal Open Markets Committee has 12 members to it. And Chairman Powell is only one of the members. So the president would have to appoint a whole lot of people before he'd really be able to have any impact on the interest rates at all. You know, even if Chairman Powell were replaced, then that wouldn't actually result in any kind of substantive change at this point. I think that the president will love to try to assert his influence over the Fed, and his practice in the past has been, as you pointed out, to bully other people and kind of use it to get his way. We actually saw it, as you were reporting earlier, with some of the trade agreements.
Right.
You know, fortunately, Chairman Powell, number one, he's shown that he's not going to be bullied, and number two, he's in a position that really there's not much the president can do, and he knows it.